All right, good afternoon, everyone. Thanks for coming. We're going to go ahead and get started. But first, I'd just like to introduce our speaker for today, Al Bingham. He's an author of The Road to 850. So Al Bingham has worked in the mortgage industry over the last 15 years. During the last 6 years, his in-depth research and expertise has been recognized on a state and national level. He has spent thousands of hours from research and counseling individuals on improving their credit scores. He has created 2 presentations of Credit Score Plus and The Road to 850, which is a supplement to his book. Al is currently working on several other projects to help people improve their credit scores. It is his goal to have people help themselves by identifying means to improve their credit scores. Al and his wife, Deborah, have 4 children. And before I welcome Al up here, just want to let everybody here know that feel free to grab some lunch if you haven't. And then we left you with a little slip with the survey. If you don't mind, either during the workshop or at the end, just filling that out. It's just a few questions that helps us out a ton to figure out how we can improve these workshops and make them more relevant for you guys. So with that said, if you'll help me, please welcome Al up here.
I think, everyone in here, I'm going to talk a little bit some of the information that's facing all of us and some of the issues that we are facing as we go forward, and a lot of misinformation that is being generated out there. I think as we go forward in this and over the events of the last year, it's really interesting that what happened this last year is a game changer. It is an absolute game changer to our finances, to our situation. It's an issue that will not be resolved in a year or 2 years, that we could actually see this coming back and affect us in 5 and 10 years down the road. It's a problem, and I'm specifically talking about the Equifax breach. We've seen all kinds of different breaches out there. The question of it is what do we do with it? How do we protect ourselves? How do we manage it? I'm going to go through some stuff that's going to absolutely surprise many here. You're going to see some things that just go, I didn't know that was true, realistic. We're going to walk through some stuff, and anyway, I give you a warning that it's going to surprise you and make you think about how you can protect yourself as you go forward. So, a little bit about myself. Did write a couple books, but do a lot of news stories throughout the country. Done over 200 for a lot of CBS affiliated stations, from Boston to LA, and I still do a lot of contributions to both KUTV and KSL and the Salt Lake Tribune here locally. So, a couple of notes I want to walk through in here. I mean, everyone gave you a handout here. Go through 4 questions. The 3 major credit bureaus were fined $27 million in 2017 for what? Does anyone know? I gave you a sheet to hand out there. You can write down your questions. We're going to come back and visit this information. This presentation, taking part of this presentation, I actually had to do a presentation back in September for credit counselors throughout the country, for professors, for deans. They're in the family finance sphere. And so we went through a lot of this information. Come to find out they weren't aware of some of the misconceptions about this. So go through 4 questions in here. 3 major credit bureaus. We'll come back and answer that in just a second. With the same financial information except for credit scores, if Becky has a 765 score and Connor has a 622, how much more in purchasing power can Becky have when qualifying for a conventional mortgage? What's the percentage? We're going to go through that one. Is it 7, 14, 23, or 38? Number 3, this is another one. This is going to come back to credit card balances should be kept below what percentage of loan limit to gain the most credit score points? I see this all the time, and it is everywhere. I'm going to walk through this one a little bit more. What do you think it is? Is it 5, 25, 30, or 50%? Then 4, which of the following will totally prevent someone from opening an account in your name? A credit freeze, credit monitoring, a credit freeze and credit monitoring, or none of the above. So anyway, I'm going to walk through this, but I want to take just a second, talk about the credit system so you get a little bit better idea of what's going on here. First off, you have lenders. So we go out and get loans from different lenders. They could be auto lender, it could be a bank, could be a credit union, anything like that. Well, they report our information up to the one of the 3, and sometimes they report to all 3 of the major credit bureaus, okay? They generally report the same day each month. They report account information, balance, payment history. They report a lot of information in that file. Well, what the credit bureaus do is they assign that credit information to an individual credit file. Now, the problem that the credit bureaus have is you have a lot of people with similar names. So one of the fields that I work in, this is a credit expert in court cases. I'm actually the lead expert on the Wells Fargo class action suit out in San Francisco, where they went in and opened up those 3.5 million unauthorized accounts. But one of the other cases that I'm working on deals with this very issue right here. When is a person's information assigned to a particular credit file? Well, you say social security number. Social security number should always identify whose personal credit file it should go into. What if someone transposes a social security number or have one digit incorrect? It happens all the time. What's the secondary information? What's other information that can validate that? Well, what happens is the credit bureaus come back and they look at your first initial of your first name and the first initial of your last name. That's the second identifier. So it takes social security number, it takes your initials, then it takes your address. And that's primarily zip code to identify and really pinpoint to say, okay, we got a wrong social security number. Let's go in and see if this other information matches up. That's how the system works. Now, over the last 2 or 3 years, we've seen the credit bureaus really make a concerted effort and clean up this information. I do not see a lot of errors in credit reports like you used to back there 5, 6 years ago. I do see it when we have a junior or senior. That, when we have a son or a father, we still see a lot of times the father's information show up on the son's report and vice versa. So anyway, give you a little bit of information. Then what happens is our information is requested from a lender. And what the lender does is they actually go to what they call a secondary credit bureau. They don't go to Equifax, TransUnion, or Experian to pull their credit reports. Generally, they go through a secondary agency that compiles their reports and gets the scores for them and then gives it to that. It could be insurance, could be a rental, could be anything. That's where the information is there. But the end user, whoever that lender or landlord has to have a purpose before they can access your credit report. So, but there's something else I want to go through this, and there's 2 questions I bring up to you today. If you go to the very first part of this, the first question I bring up, who authorizes the credit bureaus to gather your account information? Who does it? Pardon me? No one? No one? You would think, okay? We do, when we sign up, if you read the terms and conditions on the account information, it will say in there, we follow the law, the Fair Credit Reporting Act, and we will submit your credit information to one of the 3 credit bureaus, okay? So they give that information, they send it to the credit bureau. But the second question I bring up is, who's responsible to protect and make sure your information is accurate? Whose responsibility is it? If we didn't authorize the credit bureaus directly to take our information, who's responsible to make sure that the information's accurate? Is it us? Or is it them? I'll give you one other situation. We were working on a law with the Utah State Attorney General, and we went in, this is about 4 years ago, and so we were walking through, and what we wanted was more transparency to the consumer. And I'm going to show you some things today that you didn't know. I'll guarantee you don't know. And it's not out there, okay? And I deal with it. I deal with it in courts. I deal with it in college classrooms. I deal with it all the time because it's a level of misinformation that is prevalent. You have people saying things that don't have no right to say those things because they've never researched or understood what's going on here. The issue in here, when you make sure the information is correct, the issue is if the credit bureaus have our information, is that our right to know what our information is? Or is that the asset of the company that's pulled our information? Come to find out, the Attorney General, and this blew me away, he said when credit bureaus or other companies, and there's a lot of companies that are pulling your data, are out there, it's actually their information, and we don't have a right to get it, even if it is our information. That's crazy, but that's the way the laws are written. So even though they have our information, we can't demand to get access to it. So anyway, I'm going to come back and address this question because it's very important to know and how you do it. So I followed this semi. I'm going to go through 5 or 6 or 7 things in here real quick over the next 25, 30 minutes. I'm going to give you some information that you're not aware of. Credit score models, okay? See about it all the time. The 3 major credit bureaus were fined $27 million in 2017 for what? What was it? Okay? They've been hounded on that one. That's true. But it was number 2. It was deceiving consumers about their credit scores. Okay? The law that we put together about 4 years ago was to tell the consumers that the information they were given to them was not the same information given to lenders. What you're going to find out today is most of the information that you get and you find on the website is inaccurate and irrelevant. You ready? Okay. You take that number you got from Credit Karma or whatever and walk into a lender, walk in to get an auto loan, and what will they do to you?
They'll use that credit score, which will be lower rather than running again.
They're going
There's a higher rate.
they're going to laugh at you and say, we don't use that score. That doesn't matter to us.
Oh, that too.
Okay? They're going to say it's irrelevant. There's no purpose to this. So anyway, I give you this commercial. It's a great commercial from Experian. This was part of the fine. They went out to the 3 major credit bureaus and said, you cannot do this stuff any longer. But this is one of the commercials they had. Kind of interesting.
Well, a mortgage shouldn't be a problem. Your credit's in pretty good shape.
Pretty good? I know I have a 798 FICO score thanks to the tools and help on Experian.com. Kaboom.
Well, I just have a few other questions.
Chuck,
The only other question you need to ask is what else can you do for me?
I'll just take a water.
Get your credit swagger on. Become a member of Experian Credit Tracker and find out your FICO score powered by Experian. FICO scores are used in 90% of credit decisions.
Okay? What was the problem here? You're supposed to go to Experian and get your credit score. Get the Experian score. What was the problem? They had a different score model. They were selling a different score than what was used by lenders. So here you have a lady going in and say, well, I got a 796 FICO score. Well, the model that they gave to him on Experian is not used by any lender. So they knew it. It was deceitful. It was absolutely deceitful. I'll call them out on it. They lied to consumers. They lied. So what happened is the lady goes in and finds out her score is really not 796. It's much different, okay? So they were fined. Oop, my bad. Let me come back to that. So they were fined $27.1 million. This is what the Consumer Financial Protection Bureau said a year ago. TransUnion and Equifax deceived consumers about the usefulness of the credit scores they marketed, okay? Then they came back and said, well, Experian deceived consumers over how this credit scores it marketed and sold were used by lenders. Consumers deserve and should expect honest and accurate information about their credit scores, which are central to their lives. Okay, fair? Game? Well, they went in and said, we'll make some changes. Okay, it got kind of interesting. So here's the problem. Okay, you take someone with a credit score. Okay, so you go in. This is an actual situation. Person came in. They went to get what they call the classic FICO, the most commonly used FICO score out there. She ended up with these 3 scores. Then she went to Experian's website and got their scores within the hour. So nothing changed. It's just a different score algorithm. Okay. Then we went to Equifax. It showed the scores varied between 24 and 66. Then the next one was TransUnion, which was between 7 and almost 80 points. Okay. Well, when you look at that, you say, well, why does it matter? I still can get approved for any loan. The problem you have in here is when you look at it from the cost to the consumer, and you have these scores that are different, the cost can be substantial. Okay, almost $8,000 being off on what the real scores were to, $3,000. That's in real dollar amounts. That's where the deceit is coming in, because the consumer could come in and say, well, I got X, scores. So I did a story out in Sacramento a couple of years ago, 2.5 years ago. Curtis Mean, okay? Who's got a Discover card? Anyone? Okay, they give the FICO score, okay? Everyone's saying, well, we're going to give you the FICO credit score, okay? Good story. This is a very good story.
Keep it right here. Your news at 5 is just getting started. His credit card statement shows he has a perfect credit score of 850. Why the credibility of those numbers appearing on monthly statements is now being called into question.
Very much. Discover Card is now offering free FICO scores with your monthly statements.
We call on Curtis Ming with why the credibility of those scores now may be in question.
We know one guy got a perfect 850, and while excited about it, he is not sure he could trust that score.
I was very surprised.
Here it is on his Discover statement. Craig Mogul's perfect FICO score.
Yes, an 850 credit score.
Discover started offering FICO scores on their statements late last year.
Get the IT card and see your FICO credit score.
Craig has excellent credit, but isn't so sure he's got a perfect 850. Al Bingham isn't either. He wrote the book, The Road to 850.
I've never seen an 850.
When the home loan officer pulled Craig's classic FICO score, he found it was 812.
He has very good credit, but not an 850 credit score.
So how did Craig get that perfect 850 on his Discover statement?
It is a FICO score, but there are multiple versions of the FICO score.
FICO tells us there are 49 different FICO scores developed for the companies wanting them, but that means your credit card company may have a different score than a car lender or a home loan company.
They're all based on the same core mathematical algorithm, and so there are going to be variances, but they're not going to be significant variances.
Less than 50 points in most cases, but Bingham says 50 points in a credit score can amount to tens of thousands of dollars in interest over the life of a loan. He thinks the Discover FICO score is deceptive.
What is the scale that you're generating this credit score?
FICO and Discover won't say. Discover told us it uses the FICO credit score as one piece of information among many that help make a more informed credit decision about a consumer. Since we have that information available, Discover provides it free every month to customers to help them manage their financial well-being and gain insight into key credit information. Craig enjoys the idea of being perfect, but he no longer trusts Discover's FICO score.
I think it is very deceptive.
Well, we asked FICO and Discover if Craig's perfect 850 was a mistake, and neither would say, but FICO says scores change all the time. Now, the company claims at any given time, 2 million Americans have a perfect credit score. FICO says the best way to keep your score high, pay your bills on time, don't have high balances, and only open new credit when you really have to.
You want to have a handle on this score, so how do you know what's your true FICO score?
That's a good question. How do you know? There are 49 different scores. You really don't know, but FICO, you can buy your score from them directly through myfico.com, and FICO tells us the score you get on that website is the one the majority of lenders use, but I asked for a breakdown. Which lenders use what, and they admitted they don't know.
Historically, this has not been the most transparent of
processes.
A lot of consumer advocates think it needs to be more transparent.
Right.
Now that I have you confused, but this is the game that goes on out there. So I just want to explain it real quick and then come on to some other things. The FICO Classic score goes to 850, and it's used by most lenders in every aspect, from credit card, auto loans, to mortgage. It's used in basically all mortgage transactions. The FICO 8 auto loan, you go to some auto finance companies like Honda, Toyota, GMC, they use what they call a FICO auto loan that goes to 900, okay? Well, the FICO 8 bank card goes to 900 too, and it's used by Discover and American Express and a few of these others. The challenge you have as a consumer is the information you get on the website. You look down at the bottom, and the purple one, FICO 8, it's not used, is out there everywhere. But it's a score that's different, and just because it says FICO doesn't mean it's naturally the real score used by your lender. So you go in there and you get one, say I went and pulled my FICO score and went and found it different at the lender. What I'm saying is even under the confusing situation, there's only really 3 places that you can get your real classic FICO score, and that's from myfico.com, from a lender, or from a nonprofit credit counseling. That's really it. It's not out there, but it is the most widely used credit score model. You do want to know this information though. So all these other scores out there are irrelevant. And I'm going to show you, we went through and we looked at all these companies and their websites. You see this information up there. You see these bank cards right here, but you see the number of companies that offer unreliable credit scores are all over. And that's the issue, is you'll be deceived and you'll think you're much higher, and when you go to get a loan, you'll find out it's much lower. So just heads up, okay? Next thing is the issue of what we call correlation. I just want to briefly talk about this. They say, well, these fake credit scores, I call them, are 90% accurate. What they say is it's called correlation versus parallel. The federal government went in and did the study, and they said, well, 90% of the time when you go do something on your credit, the fake credit scores follow the trend of the real FICO credit score. Well, the problem you have in here is if you have a FICO score that goes 3 points after you, say, open an account or do something, the consumer score could go up 40 points, and they call that accurate, okay? That's what they call accurate. It's not accurate. What we're talking about is when it parallels the real FICO score and it shows the same improvement after doing, that's accuracy, okay? So don't get deceived. You'll see this correlation in some of the disclosures in there. It'll say, well, it correlates the FICO score 90% of the time. It's not exactly accurate, okay? The big problem in here is if you go get all these different score models are out there, and they're hard to find out which websites are offering what, because they hide it in about the 6th page of a disclosure. You go open a credit card and you can have different things happen to all these credit scores, and you think, well, I went to Credit Karma and it showed my credit score went up 5 points. Just because it went to Credit Karma and went up 5 points, it actually could do the adverse, because you could go to the real FICO score and actually could go down, believe it or not, and it happens many times. So an accurate result is always better than a guesstimate. So anyway, purchasing power, something I want to just briefly bring up, okay? With the same financial information except for credit scores, Becky has a 765 and Connor's a 622. How much in purchasing power can Becky qualify? If there is one thing you can walk away from today, is this. This is huge. And consumers don't realize it when you go buy a car or anything like that, how much in purchasing power you can lose. What do you think the number is? It's 38%. Okay, want to take a breath? It's huge. Do I have your attention? Even for different other things like auto loans and things like that, you could have you know, a substantially higher purchasing power with a higher credit score, or it can knock you down about 30%. So you could buy a car really for $25,000 or for $33,000 and have the same payment. It's that crazy. But I just show you this. You have someone who has a $276,000 loan, you have a 3.5% interest rate. With the lower credit score, obviously, and I'm at 622, you have the higher MI, the mortgage insurance, it comes out to $1,326, and it just eats at people's purchasing power. So for those going to buy a car, for those going to buy a house, you need to do and know exactly how to do this and get this higher. So it's critical, okay? This just gives you an outline of some of the increases in between the upwards of 15 to 30%, 35%. So want to go, I'll show you one more point in here. If you go into a $300,000 mortgage, 5% down, which is most common, you look at the different payment options. And you go down and you look as the credit score goes down, you see for that $300,000 loan, how much higher that payment can go. It's substantial. So next thing is balance to credit limit. This is a common one I see all the time. What is the proper balance I should have on a credit card to get the most credit score points? What should it be? Anyone? Who says 3? It's actually 5. Okay. Where did 30% come from? It came from one of these fake credit scores that came out, and they said, as long as you keep every consumer, you can keep your credit score the highest if you keep it below 30%. Well, to FICO, it's actually 5%. It is not 30%. It's a big issue in here. So you lose valuable credit score points when you get your credit card balances above that 5%. It becomes a huge issue, okay? So remember, the balance that shows on your credit report is the balance when it is reported to the credit bureaus. That is the percentage that will show up, or the balance, and then the percentage will relate on that. And anyone who pulls your credit report will see that. So the point of it is the Experian Plus score. That's where the 30% came from. But that's the most misconceived. Honestly, I deal with this in court, and they say, what's the correct percentage? I always say it's 5%. And it is 5%. Say, where do you get this 30%? It's all over the place. It's at creditcards.com. I went in there and looked at this, and they said, credit use ratio accounts for 30% of your credit score. It's not true. It is not. It's 5%. So even if you have 30%, you're probably losing about 7 to 10 credit FICO score points. So just heads up on that. Last thing, I'm going to go down to credit monitoring, credit freezes, okay? Last few minutes here.
On the floor! Everybody on the floor!
Hey, do something. Oh, I'm not a security guard. I'm a security monitor. I only notify people if there's a robbery. There's a robbery.
Okay. We've all seen that commercial, right? Fair? What's the problem with that commercial? I gotta be honest, it's the most interesting, I should say. What's the problem with that commercial? It's a delayed response, okay? Why you tell me we're getting robbed when we're getting robbed right now? Why don't you protect us before we get robbed? Okay? LifeLock. You see those commercials, and LifeLock has come out and said, we'll give you $1 million guarantee to protect your identity. I want you to think about that, okay? LifeLock paid $12 million in 2012 and a $100 million fine in 2015 for deceptive advertising against this claim that LifeLock offers protection against all types of identity theft. In truth, the protection actually left enough holes that you could drive a truck through it. Okay? So whoever's got a LifeLock account's gonna go cancel it today. But the problem here is if your identity is out there, which it's happened for most of us, whose identity was breached with Equifax? Anyone? Okay. Who doesn't know? I would go look, okay? I would just count on it being out there, okay? Someone's gonna lose that information. The problem you have is once that information's out there, what's gonna stop it from someone using that Social Security number? What? Okay? So LifeLock says they'll offer protection, but what do they really do? Okay? So bring you an important question. Which of the following will totally prevent someone from opening an account? Anyone? A credit freeze? Okay. We have a few ones. What else?
Option
3?
three.
Okay. How about none of them? And let me explain why. Okay, in the Wells Fargo case, the $3.5 million that it's Jabari versus Wells Fargo out in San Francisco. I've had to write a couple of affidavits to the court, and they're real long summaries. They're not just short stuff, one-page summaries. The issue in there, Wells Fargo pulled or opened an account. Do you think they pulled credit reports on the people when they opened the account? They didn't. Okay? There is no law that says any lender has to pull a credit report to open an account. So what does it do for all these, the credit monitoring and credit freezes? Okay? Come back and think about it. It doesn't prevent identity theft. They're just talking about monitoring. All they do is tell you, well, someone's robbing your bank. But you still have measures in your toolbox, even if you didn't have credit monitoring, to go back and say, this isn't my account. And they can go back, the credit bureaus, if you dispute an account, will go back and say, we have to pull it off your credit report, and we'll investigate it for 90 days. And as long as you submit a police report and find out that this information is not accurate, you're going to be fine in most every case. I did a story with Matt Gephardt here with Channel 2 about 3 months ago, dealing with a guy that had his identity stolen. And this guy went to all kinds of department stores up and down the Wasatch Front, and they had video camera, they had everything in there, and he went and delivered it to the police. The police wouldn't prosecute him because they said it was too small of an issue to deal with. But what he did do was because he had a police report, he was able to go in, the credit bureaus validated and said, this is not your information, and removed it. And they can permanently delete that information so it doesn't show up on the credit report again. So anyway, credit monitoring doesn't prevent identity theft. The other issue in here is only focused on one credit bureau. So you have this credit monitoring that Equifax came out to. It will only monitor the Equifax credit report. It will not monitor TransUnion or Experian. So what's the purpose? Because there are a lot of lenders that use Experian out here in the West. You would never know that someone opened an account in your name. Or if you go to TransUnion, who a lot of lenders up in the Northeast use TransUnion, you would never know that someone opened an account. So it's really simple, and it doesn't do what it's supposed to do. Question?
Yeah, more of a comment than a question.
Okay.
I was up at the hospital like 2 weeks ago, and I was there the night before. I still had the bracelet on,
Mm-hmm.
and I showed back up, and they asked for my ID, and then they're like, "You're not in the system. We need your social security number."
Okay.
And I just needed to get help, so I just told them it. Is that something I should be concerned about? The emergency room asking for a social security number?
It concerns me that anytime anyone asks for a Social Security number for a non-financial.
Especially when I had the bracelet on from the day before, and they said they didn't identify me, recognize me. It's not a little bit.
I would be concerned. I would. You got to be careful in giving your Social Security out to whoever. I mean, every possibility. If it's in a lending situation or any financial transaction, that's fair. or a tax issue, that's fair. But when they start using it for other issues, that's a concern. So, yeah.
Yeah, I guess it just, usually it's targeted to people in stressful situations.
Yeah.
Where they'll just be like, sure.
And we can talk if you have questions on that. The other thing is if you monitor all three bureaus, it can be extremely costly. Okay, I come back to that very first screen that we presented for. Remember when I talked about how the system, they pull the credit reports and the credit information over? My question is, why are we paying them when we didn't directly authorize them to pull our information? Why are we paying them to monitor our credit? Shouldn't it be the credit bureau's responsibility to make sure that the information in our credit files is accurate? It's the most backwards business model. They pull the information from other people, and then they charge us to make sure it's accurate. That is backwards. And if a lot of consumers stood up and said, no, we're not going to pay for this, you're going to make sure it's accurate. You're getting paid for this. You make sure it's correct. So anyway, that's something to think about. The other point I bring up, the LifeLock. So is LifeLock going to go out to someone and they say they got $1 million coverage? They're going to go to some identity theft that's using your identity and say, hey, look, could you stop using this guy's identity? They're not going to do that. What I'm saying is the marketing that LifeLock has out there is pretty desperate, trying to get your money to pay for a subscription when it really has no deep value to you. It just gives you a warning. So come back to another one, okay? Credit freezes. Okay, we talked about the Wells Fargo, they didn't pull credit reports. It doesn't prevent identity theft. I'm gonna pull you up a credit report here, okay? This is a person that had all three of his credit reports frozen with TransUnion, Equifax, and Experian. And then he went to a lender and he pulled his just to see if they could pull his credit report. What is the problem here? Oh, my bad. Let me come back. If you look at this, right there, these are two credit scores. And then it says down here that TransUnion did not provide anything. But Experian and Equifax still provided the lender the information even though he had a credit freeze. I will tell you, credit freezes probably have somewhere between a 30 and 35% failure rate. Even though you think you've frozen your credit reports, and yeah, it can be more difficult for someone to go in and open an account in your name. All it is a roadblock. It's not an end-all solution. What I'm telling you is if you're not going to use credit, that's fair, but you could have some secondary consequences too, where someone could still get your information, one. And two, I just warn people about this. Insurance companies pull your credit a lot to, for your insurance premiums. Your insurance premiums could go up because they can't pull your credit report. There is one major company that uses your credit score as the #1 factor in your auto insurance premium. I won't tell you who, ahead of DUIs, accidents, and tickets. Okay? So there are secondary consequences to this. So on a credit freeze, it just doesn't prevent someone from taking out a loan. It may prevent someone from accessing your credit report, okay? A couple more notes, make it more difficult for you to know. If you try to go get your information and you say, I want to look at my credit report, sometimes you can't get access to that. So that can happen. Now through annualcreditreport.com, you can still get your credit report even if it has a credit freeze. And finally, it can be costly. I think bottom line to this whole Equifax issue is the real solution is we're going to have to look at our credit whenever we get a chance, whenever we go buy a car or whenever we go get a mortgage, or even I would check it even months beforehand just to make sure that it's in a good position so you're not surprised down the road. It will be more costly because we're going to have to go check it and look at it. And that's where the challenge is. It wasn't our fault that our information was lost, but yet we're going to suffer the consequences of paying more to get access to that information. One last note I give to you. I knew this was going to happen, and I called it 6 months ago when Equifax came out. I said, what you're going to see is you're going to see the credit bureau start charging more money. They have raised their fees 20% year over year from 2017 to 2018. So the cost of getting access to that information has gone up substantially. And I know, I think that's really where it's going to be. So